My name is Jenny Anchondo, and I'm here to serve as the host and moderator of today's events, as I do each and every Thursday. I really look forward to these. I feel like we are all learning together, and Sarah brings in just a really, really impressive lineup of speakers each and every week, and today is no different. So today is part 2 in a 2-part series. Last week, we sort of did a general overview, and this week we are honing in on what is a credit score, credit scoring, and best practices for it. So if you're somebody who's like, hey, you know what, my credit score could use a little bit of work, today's your day. Or if you're somebody who's like, I don't even know what that is, I don't know where to look for it, today is also your day. Even if you're an expert, I have a feeling that Maria is going to give you some really, really good information. So I'm going to let her get going in just a minute, but first I want to let you know a little bit more about our speaker today. She is Maria Hall. She's a business development officer with Lift Fund. Now, if you've been in past sessions, you've heard about Lift Fund. It's the largest micro lender in the United States. So as a part of what she does there, she serves as a resource for small business owners by providing business advising services and then guiding them through Lift Fund's lending programs and their development services, because we all know how daunting that can be when you go to look for a loan and you really just don't even know how to navigate. So Maria is somebody who helps to do that. She works with the referral partners and community organizations to provide financial education, business support, etc., in terms of identifying business clients' lending needs and figuring out what do they really need and what do they need to get started and what do they need to keep going. She's a business veteran of more than 30 years. She has extensive experience in economic development focused on small business development. She has also been a business advisor. She's worked on strategic planning, sales, financial analysis, leadership management. She's kind of done it all. She's also a professional PATH certified coach, licensed trainer, national training team member, and a certified startup expert, top 6 business coach. I could go on and on about Maria and what she brings to the table, but I don't want to take up the whole hour with that. On a personal note, she's also a proud abuela to Madeline. She loves to read books. She does yoga. She loves the beach. So she's a little bit like probably many of us here today, just enjoying work and fun. So without further ado, I will hand it over to Maria to talk about what is a credit score. And by the way, I'm going to mute myself and be taking notes along with you, and I'll come up with my own questions, but I'm telling you guys, I want to ask your questions. All right, Maria, you are up.
We're going to talk about what is a credit score, and really learning about credit scores, how they work, and really best practices for you as well. So our mission at Lift Fund is really to provide, credit and services to our small businesses and entrepreneurs that don't have access to loans for commercial sources, and to really provide leadership and innovation to the micro lending industry. So Jenny said, you've heard Lift Fund's name before. We're not a bank, first of all. I think that's the most important thing. We actually partner with banks and work with banks. We're a community development financial institution. So CDFIs are micro lenders that are out there kind of helping fill the gaps in different areas. Our passion and our vision at Lift Fund is to transform lives by opening doors, really leveling the financial playing field and building a community of shared success. We don't just loan money, we provide support and collaborate with local government and organizations like SARE. And our passion is really focused on the 4 areas that you see above, all around the entrepreneurial, providing that safe space, providing resources, accessible information, and really championing small business victories. Our record and impact, over 409 million in opportunity and capital opportunity since 1994. That's how long we've been established. Almost 25,000 small business loans across our multi-state footprint. We've got a wide network of resource partners and really diverse clients. 83% are minorities, 40% are women-owned businesses. When we say we're the largest lender, we may not necessarily be the largest if you look us up and rate it and score us, but we're the largest as far as really providing loans in the minority space, in that 83% that we do. This just kind of shows you a quick glance of our 15 states where we are. Just know if you're not in our service area, if you're in another state, you can Google CDFIs in your area and see what other micro lenders might be available to you. So what I'm going to do is do a quick little recap of what we talked about last week, right? We talked about the 5 C's of credit and how important it is for you to know that when you go to a lender and they're looking at everything, the 5 C's are used to evaluate how willing and able you are to pay back your loan. It's really the way that a bank is going to, or a lender is going to look at your credit worthiness and whether you're really ready for a loan as well. They're universal, right? So every bank, every lending institution is going to use the 5 C's in one way or another in evaluating it. The character C, which is one that we're going to focus on today, this is the demonstrated responsibility and integrity in your actions, and your personal credit score speaks to that. Capacity, how you plan to repay the loan. Capital, what you have personally invested in the company. Collateral, a form of security that kind of will guarantee the repayment. And then the conditions, right? What's the loan about? Does it make sense? Your ability and your expertise in what you're trying to do. So before we go into the what is a credit score, it's important to know the why, right? As a business owner, your personal credit is your foundation to how you're building your business. So having a good personal credit score can have significant impact on time and money, as well as it indicates to lenders how well you manage your finances and how you take on risks. So this is a big question that I get asked a lot, right? What does my personal credit score have to do with my business? And as it says here, it's foundational to it. And know that until you become a mega company, your personal credit is always going to be a part of your story and a part of the story that you're putting out there. So it's important for you to monitor and continually be working on this. So let's look at what is a credit score. So a lot of times this is referred to as your FICO score, right? We've heard that as well. So basically a credit score is a number between 300 and 850, and it measures your credit worthiness. It shares more about your financial history and your ability to pay back. And it's one of the first things that a financial institution is going to review. Now, the graph that you can see over to your right kind of represents the average scores of consumers on a national basis. So at Lift Fund, we work with all of the credit scores, but primarily the people on the right-hand side of the graph are the ones that we're working with, particularly in that fair to good area. What's categorized as very poor, which is, 579 or under. We are able to loan in those areas as well, right? A credit score doesn't necessarily limit you at Lift Fund, but it might limit how much you're able to qualify for. Okay, so that's going to be important as well. So now let's look at the factors, right? Because your credit score is determined by five key factors. So the credit score, as I said before, right, it's important. It's going to determine the terms you're going to receive when you request anything, from getting a cell phone, from qualifying for your insurance to a loan, right? So credit scores impact us in a lot of different ways. And these are 5 elements that make up your credit score. So the important thing is that with time and attention, you can positively impact your score. So payment history. Lenders want to know how responsibly you manage your credit. And one aspect of that is whether or not you make your payments on time. So this single element has the largest impact of all on your credit score. It accounts for 35% of your score. So a tip that I would give to you here in this whole payment history part is consider setting up automatic payments on your accounts to help avoid late payments, right? And just to keep that payment coming in on time. That's a key thing that you can do there. The second component is the amounts owed. This is also referred to as credit utilization. You might hear a banker say that or a lender say that. What's your credit utilization? So this is the amount of available credit that you're using, and it accounts for 30% of your overall credit score. So let's say, for example, that you have access to $10,000 in available credit, right, with your different credit cards. And you're using $5,000, right? You have a balance of $5,000. Your credit utilization would be 50%. So now a recommendation that we give to people is that you try to keep that utilization percentage to at least to 30% or under 30%. Another component is the length of history. How long have you had the credit? Now, this is the one component in our credit score that we really don't have much control over, right? It's just going to take time. It's responsible for 15% of your credit score. The age of your oldest account shows an overall trend of performance. So, though we can't make this move any faster, one thing that will help you in this area is if you have older accounts, don't necessarily close them out. Sometimes I'll see people say, "Oh, I had a better credit card offer, more points with this. I closed out an old one," and they see a ding on their credit score, right? So your length of history is going to be important for you. So some of those accounts that you've had for years and years, you might want to have one of those that you keep on. It's going to really help with your credit score. New credit. So credit inquiries. When a lender accesses your credit report, sometimes they'll say, we're going to do a hard pull on your credit, right? It's going to result in an inquiry being reflected on your report. So it's not bad to apply for new credit. Doing it too often can be viewed negatively, and the number of inquiries or new accounts being opened, that makes up 10% of your score. So a tip here, we're going to look at best practices in a minute, but if you're looking for, like, let's say the best loan rate on something, right? You want to do your homework, look at a few different places, and then apply in a very short period of time as possible. So let's say we're going to look at 2 or 3 different potential loan applications. If you do it within a very similar period of time, within the same day, within the couple of days, it only looks like one inquiry versus multiple ones, right? Versus waiting, I'm going to apply for this one. I didn't get what I wanted. I'm going to try another one a few weeks later. That you should do it all as part of a plan of how you're going to do that. So now let's look at the basics of credit reporting. So there's 3 primary reporting agencies: TransUnion, Equifax, and Experian. So sometimes it's important, to know or ask a lender which account are you going to use, right? Just to know for sure. Normally, your personal credit history is going to typically include the types of credit that you use, the length of time your accounts have been open, if you've paid your bills on time, how much credit you've used, and whether or not you're seeking new sources of credit, right? So your credit report's going to show all of that information to the lender. So let's look at the best practices, right? So as we looked at payment history, I gave you the tip earlier about setting up let's say your revolving credit cards on like that automatic pay, at least for that minimum amount. And then the other thing I'd say is schedule a reminder at least 5 days before it's due, right? So if you want to make a larger payment or just to kind of be that little trigger, but having it on auto pay kind of prevents the whoops, you went on vacation, whoops, life happened and you forgot. Because I mentioned last week that let's say you pay your credit card a day or 2 after it's due, right? It doesn't show on your credit. But when a lender looks at your bank statements, because they will as part of your applying for a loan, they're going to see if you're paying it on time or if you've taken those couple of extra days. So that's going to be important there. Under credit utilization, right? Don't spend beyond your means. So you want to look at how do you reduce existing balances and don't exceed your credit card limits. You want to keep your usage to that 35% to 30%. And look at having some type of emergency fund that you kind of have on the side. So if you ever get into a jam with your personal income, you've got some money to make those balances. But do know that the credit utilization, so for example, let's say that you have a credit card balance of $2,500. And a lot of our credit cards allow us to go over that amount. Sometimes we might get charged a little extra for going over, but the credit card company doesn't stop you from going over that amount. That's also something that can really impact your utilization and it'll be seen. So that's going to be part of that as well. Your credit length, of course, this is the one that we really can't do much about. So really just kind of, it's okay to keep those older ones and you want to maintain that as well, right? For your overall history. credit inquiries. Don't apply for credit that you don't need. Okay, so I'm going to speak out to those of us that fall for you're at the store making a large purchase, or you're buying some stuff, right? Because there's a sale. And then they tell you, hey, you can save 20% today if you apply for a card, a Belk, a Macy's, whatever, that type of thing. Resist that urge, right? Because that's a new account, that's a new inquiry, that's something you want to have as few applications as necessary in that, because that's going to impact your credit score. And then the credit types, right? So you want to seek to have a variety of accounts. So you want to have some revolving, which would be credit cards, and then some installment loans, such as an auto loan or a mortgage, a student loan, something that shows that you're making the same payment on that regular schedule that's going to impact your credit, as well as that revolving one as well. So now let's look at how you monitor your credit score, right? So there's 4 easy steps to monitor your credit. You can access a free credit report at www.annualcreditreport.com, and we're going to take a look at what those screens look like. The main thing is when you look at your credit report, is that you review your credit reports for any errors, right? Sometimes very common names. If something shows up on your credit report and it's not you, you need to do whatever you need to do to take care of that, right? And we're going to look at some ways that you can do that, but you want to check to make sure that it's accurate, first of all. And you want to do it before you go apply for the loan, not after, right? Because it's better for you to have taken care of the issue before you've actually applied. Make note of your current credit score and repeat the process annually, right? So Maria is not a credit expert or a credit advisor, but part of the best practices of credit is that on an annual basis, you're looking, normally you would rotate right between your TransUnion, your Equifax, and your Experian, and order one like every 4 months and just kind of review what's going on with those. Especially now with so much that's happening with cybersecurity and credit theft and identity theft issues, a lot of times you'll see some of these things on your credit report. So now I just want to show you a few screens of some of the things that you can do. So the first thing is when I said go to annualcreditreport.com is what the website looks like. Because even if you just Google annual credit report, other things are going to pop up. Normally it's ads, right? And there's one that's called free annualcreditreport.com, but it's not the annualcreditreport.com that's the official site. Because when you look at your credit yourself through this, it doesn't create an inquiry. This is different. So you just monitoring your credit or whatever, that's not going to impact your score or anything. Through COVID, you've been allowed to look at your credit on a weekly basis if you want to. Okay, so it's really important that you go to the right website and everything to look at this. Now let's talk about, what if you find an error? Right? So I just copy and pasted some information that's very specific to the steps that you can take and what you can do. So if you go to the website that I have here, the usa.gov/credit-reports, you'll see information about how to work through if you find an error, right? What do you do? And making sure that the information is corrected on your report. So on this website, there's even some sample dispute letters you can do and really detailed instructions on how to report errors. Because unfortunately, you've got to be, not unfortunately, but you need to be an advocate for your credit. So if there's something that's wrong on your credit, you need to do what needs to be done to get it fixed. And so let's say something did show up, they told you they were going to fix it. Go back and check, right? Wait about a month, because sometimes it takes a month to 30 to 60 days, but go back and check to make sure that it was corrected. And this kind of gives you a little bit of the steps also at fixing errors, right? So you want to contact both the credit reporting agency and the company that has the information that's incorrect, right? Those are the 2 steps that you need to do. Tell the credit reporting agency that there is something that's inaccurate, and really keep copies of all your correspondence and everything on that. So there's resources there for you to use to know, how to be able to Look, when you find an error, what to do and how to fix it. So why is personal credit reviewed for a business loan? This is really going to provide lenders with the insight in what you've done in the past. Remember how they use the past to make assumptions on what you're going to do in the future. So if you've been really good at paying everything on your personal, that's going to mean you're going to be really good at paying everything on your business side as well. Generally, most lenders want to know the answer to really three key questions. Can you repay the loan? Will you repay the loan? Will you make the payment even if something unexpected happens? Because especially for startups, when you're getting a loan, your personal income and your personal ability to repay that, whether the business succeeds or doesn't succeed, is going to really be important to whether or not you're able, to get the loan and everything as well. Refresher to go back to, right? I started with the 5 C's of credit and how this looks. So we see that the character is that main one. Know that your personal credit is going to really, really help you. The other 4 C's are important as well, but really your personal credit score is one of the top ones that I see out there. I shared the bonus C last week. So when it comes to communication, right, and your credit, so you want to have open communications with your lender and other advisors about your credit. And also within your credit report itself, there's going to be public information records and different information about your company or about you personally that's going to be key. So if there's some things that show up on your credit report and you can see it, don't think that the lender isn't going to see it when they pull your credit report as well. So if there's some things that you can explain, right, because things happen in our lives, right? We may have some medical things that show up on our credit. Many times a lending institution, they won't take it into account, or they're just going to need a little bit of explanation for it. So for you, being open in your communication about if you've got something on your credit report that's showing up, that is going to show up, let the lender know about it before they pull your credit, not after the fact. That's also going to be really key and important, for you as well in that communication process with them. Oops, sorry, let's see here. So just kind of a recap, last week I shared this as well. I wanted to point out a couple of things. Our top 5 industries that we are able to help clients in are in the services, transportation and warehousing, professional services, retail and construction. And it kind of gives you a breakdown too of the types of clients that we've helped as far as their years in the business. So you can see that more than half of our loans are made to businesses under 5 years. A few of our lift fund solutions, the kinds of loans that we're able to make, 504 loans, micro loans from 500 to 500,000, the business services that we can provide, individual consultations, helping you with credit and financial information as we look at things and we see when you're actually ready, because sometimes your credit and the score of your credit, it's going to take some time to either build it up or for things to drop off, right? If we've had some repayment issues or things from the past, there's going to be some time element in that as well. So Jenny, I left us time for questions that we could talk about because it looks like I've really breezed through our credit information. So let's see what questions you have and maybe some examples if I can talk about some different things with credit.
You're done in record time, Maria. Record time. That's awesome. So you guys, we have a ton of time to talk. I don't see any questions in the chat right now. So if you have one, you're going to be the first one up to get a question answered. And you might even be wondering, like, what kinds of questions can I ask? And I think sometimes that's where we're not getting it because we're thinking, okay, can she answer this? Can she not? If you have a specific scenario, you guys type it in there. Maria will say if it's something that she can't answer, right? She'll say if she's like, well, that's not really me, but there's a chance that it really is something that she can answer. And I tell you what, if you've ever tried to go through this process, and try to get a hold of an expert, that can be tough. So you don't often have access to somebody like Maria that can, kind of go through this with you. But luckily I've been taking plenty of my own notes, and I'm going to start off with kind of a tough one. And again, this may be one where you're like, oh, not really my expertise when it comes to credit. What about somebody who's had their identity stolen? Can you speak to that? What the process is like for getting your identity back, and what that looks like when it comes to repairing credit if that damaged your credit?
Okay. So first of all, when there is identity theft, I'm going to say probably 99% of the time it's going to impact your credit, right? Because all of a sudden there's going to be things that you say, I don't know, this isn't me, right? You can't go into debt paying off all of these things that somebody else, posts. Unfortunately, when identity theft happens, you're guilty till proven innocent, right? So your due diligence and part of your documentation to help you is to file criminal charges, right? To actually file a police report and document, because that's part of your documentation and part of your keeping track of information, so that when you go apply for credit, you've got the case of, oh, it was identity theft, because anybody can say it was identity theft, but what were the steps that you took to mitigate it, right? Reporting it to the credit bureaus, freezing your credit. There's some different, recommended steps and things that you can do if somebody's stolen your identity, right? Because that's one factor. Another thing that happens, which has happened to people, is somebody's database gets hacked, and then all of a sudden information for thousands and thousands of people is out there, and you get an email that says, hey, your data was compromised, and some different things, right? So there's a possibility of identity theft. So you need to do the steps of freezing your credit, monitoring your credit, so that if you see anything irregular, you can report it right away, as well. Those things will happen. But for sure, if someone has stolen your identity, you need to do the due diligence of file a police report, file the right documentation, and keep all of that correspondence, because that'll help you. I mean, obviously, a lender is going to look at those things as what you've done to fix that, to correct that. Yeah.
How long does that process take? What is that process like? If somebody's like, yeah, I had it stolen, but I work full time and I just don't have time. I've got kids. I don't have time to go through all this process. How long are they in for with that repair?
So that's one that I don't know, because I don't have firsthand knowledge on how long it takes. I really don't. I really think it's how fast you've reacted to it and have caught it to see it, right? So that's why the active surveillance of you monitoring your credit is so important. Because unless you're checking, you may not necessarily know that it is, type thing. So you really need to monitor your credit just to check, right? To see. So that's why so many people now, with the different apps that are out there, with Credit Karma, you can get different notifications. So if, you could freeze everything, right? So that nobody can look at your credit or do anything with your credit without, so that's one strategy to prevent it overall. But really just monitoring and looking at it. Once it's happened, I think it just really depends on the severity and the circumstances. So Jeannie, I don't have there's not a right or wrong as far as timing on that.
Okay, gotcha. I just empathize with anybody going through it.
Yes.
Really,
Mm-hmm.
it's really a lot. I know we kind of went down that other path, but I also wanted to say I've noticed that the attendance has gone up since we first started. I know summer is such a busy time for people, and so sometimes people may be running late to the sessions. If you missed the intro, it's important to note that Maria Hall is a business development officer with Lift Fund, which is the largest micro lender in the United States. Maria, can you explain what micro lenders are?
Sure. So a micro lender is, well, first of all, it's not a bank, right? Because most of the time people think, oh, you're a bank. So it's not a bank. We do microloans for businesses anywhere from $500 to $500,000. Through our other government programs, we can do up to $5 million with our 504 loans, where we actually partner with banks. But normally for us, we fill in the gaps of a loan that a regular bank may not be willing to do, right? So we'll look at our best referrals and everything, comes, from loans. Or comes from bankers and stuff that they're not able to do the loans for their clients, and they send them to us, to work with. So we work in partnership in that, and providing education for people, as well on that.
I have muted myself and I'm messing up my mute button, but I brought that up because I remember last time thinking, okay, when I hear the word micro lender, I think really, really, really small. And then on the last session, if you guys weren't here for her last session, I highly recommend going back and listening to the replay. It's already up on Sarah National's YouTube channel. And so she was explaining that. I'm thinking, okay, well, it's all perspective, right? Because you're thinking micro, you think, oh, just like these really small amounts of money, but you can really serve a lot of different populations and a lot of different businesses, and also and in a smaller amount. Sometimes you think, oh, would somebody do a $500 loan? And yes, you do. So I found that to be interesting as well. So loving the questions that are starting to come in. Somebody's asking, why don't utilities count on the credit score? Do you know?
So a couple of things, right? There are ways, and of course, I'm not a credit expert, but there are some different ways that you can report certain things to show and help with your credit score. So for example, your rent, right? There are some different places where I've seen that you can actually register that monthly debt, and it'll show like your regular rent payments and everything through your credit reporting. So there are ways that you can set some different installment things that normally wouldn't show up on your credit. Because first of all, a utility company, there's just thousands and thousands of people. They normally don't report, or you're going to see you potentially being dinged with utility is that if it goes into collections. Because if your utility bill goes into collection, you're going to see that on your credit report when it goes into collections. So you won't see it as a payment in your credit, in your payment history, but you will see it if it comes up as a collection, right? So earlier, I really didn't talk about the negative things, and maybe I'll have to add that for next time, right? What are some negative things that impact your credits, that impact the credit report and what is seen, right? So all kinds of public information. So if you have any type of tax lien, any type of legal type situation, that's going to show up on your credit report. If you filed bankruptcy, that's going to show up on your credit report. And obviously, we know that bankruptcy in a place is a lifeline for someone, right? Because that financial situation. So we don't want to say like, don't file bankruptcy. That's not what I'm saying. It's just really knowing the guidelines and the rules so that when the time has expired and that should be off of your credit, it comes off, right? So that your due diligence and following up, because sometimes things by law are only allowed to be on your credit for so long, and then the agency has to take it off. So that part of that monitoring and part of that process might be that you're just tracking it so that when the time has expired, it actually comes off. Because if you don't do it, it might very well be that it'll still be on there. And that, obviously when they pull the credit, the lender is going to look at the years and know, but if it can be just removed from your report, you should be pushing for that. And once you get to those time limits, right, because credit is governed by the Fair Credit Reporting Act, there are some things that you can do to make sure that the thing gets removed. So if it's going to impact you, just make sure it's just for the time, right? Because at the end of the day, there's great nonprofits that are out there that help with credit kind of consultation, looking at it, helping you, like holding your hand through the process of how you buy it down, fix it, kind of get your budget in order. That's not what I'm an expert at, but I do know that those people are out there and can help you, and there's free resources. I would just caution you that there's also a lot of people out there that are charging money and are really a scam and could really do more harm than good. So be very cautious of credit repair services and making sure you know what they're going to be able to do and help you. Because at the end of the day, if you owe something and it's a legitimate debt that you have, there's no way to get that off of your credit report, right? So credit repair can be done for things that are no longer relevant, have gone past their timeline or that type of thing, but they can't get rid of a debt that you have there. And I think sometimes people think, oh, they can make my debts disappear. And they can't. They can't.
Right. And that can be a frustrating thing, right? If somebody's kind of, yeah, figuring out, oh, how do I get rid of this? How do I, start from, square one, that sort of thing. That can be tough. Somebody's asking if your opinion on this, and again, anything that I asked today, if it's not in your realm, totally fine. We're just having a conversation.
Yeah.
Is purchasing an identity theft coverage effective? I know you mentioned, I think, Credit Karma or one of those. I don't know if that falls in that realm.
Okay. So I'm not an expert on this, but I mean, identity theft insurance, I really think that it's a personal choice. The good thing is that normally you're paying a small fee. For some, it's part of the coverage or something that's available to you. So if you have it available to you, it does help, right? Because if you fall victim to identity theft, if somebody steals your identity, you're going to need to get an attorney involved, unfortunately, right? Because an attorney is going to write the legalese, the letters, and that type of thing. So normally identity theft protection provides those resources. It provides monitoring. So different ones have different things. Obviously, I don't sell it. I'm not an expert at it, but it's useful in the fact of the peace of mind it's going to provide for you if you have it, right? So instead of, you mentioned, Jenny, well, oh my gosh, how long is this going to take? If they're busy moms, if they're whatever, that's identity theft protection kind of is that insurance for that, to take care of it. I mean, you hope it never happens to you, but identity theft is just a matter of when it's going to happen, to someone. So it's very prevalent. So you have to be very, cautious, checking things, monitoring your credit. But definitely, I think if you can afford the identity theft protection, if it makes sense and is affordable, again, there's scams with that too. So make sure that it's a reputable company, right? Research that the company you're using for the identity theft protection is legit and, is there and in place. Yeah.
Which ones are legit? Is Credit Karma one of those? I didn't know if that was in that.
So Credit Karma is actually a place where you can look up your score. I mean, it's an app. So they probably do have, probably within Credit Karma. I've never used Credit Karma for identity theft protection. So I don't really know what they offer, but I would say probably Credit Karma is going to be, everybody knows it. It's a big name that's out there. I just really can't speak to that. And that might be a great speaker to have come to talk about that, right? To talk about identity theft and someone who's an expert in that. So I'm not a subject matter expert. I would definitely, recommend it. Normally, if for some reason there is a breach of information, right? Like how I said earlier, a bunch of people are impacted by something, right? Their information is out there. Part of the services that they provide is protection for a period of time, is take advantage of it. If you've got it and it's being offered to you, you should definitely take advantage of it and use it.
Definitely. Yeah, definitely. Yeah. People were asking a lot of questions about if those credit apps are trustworthy and accurate. And I know basically the answer to that was just, you got to look it up and do your research to find out if you're working with a reputable one, which that can be, time consuming. Let's see, some of these other questions aren't necessarily pertaining to your area of expertise here, but as I'm kind of filtering through.
Yeah. And I will say with the Credit Karma, because obviously Credit Karma is going to give you a score. And the main thing for you that's important is the three main, credit companies that I spoke about, right? TransUnion, Experian, Equifax, is that you should look at those different reports for yourself every year. Now, I think looking at all three all at once can be very overwhelming. That's why it's like rotate it, right? Put it like every 4 months, you just check one of them for yourself to see, because it's going to show you the activity. And know that whoever you're applying for is, find out which one they're going to use. Because that way you can look up your score for free. So Credit Karma kind of gives you an idea, hey, this is where your credit score is. But really, it's every different of those three, they're kind of have different little nuances to how the score that they have. So it's not unlikely for you to have, I have a TransUnion this, I have an Experian this, and I have an Equifax this, and they're a few points apart, right? So one credit score isn't the same across all three of the credit companies.
Yeah, and we talked about that last week. It's kind of like it can vary a little bit, probably not a ton, but it can,
Yes, but there'll be a little variable. There will be.
So we have somebody on here who's somebody who believes that, listen, if you don't have the money to buy outright, then I don't buy it. So they pay cash for everything. They pay cash, it sounds like, um for everything except for large purchases like homes and cars. They're kind of, it sounds like, bummed out, like, why should that affect my credit score? Because they're not actively using credit all the time aside from homes and cars. Any advice for that person?
So for that person, it sounds to me like they're very disciplined in what they do and in how they manage their money, that I would just say apply for or have one or two credit cards that you pay off every month. Right. So that way they'll be, because obviously they have installment debt that we can show that there's good payments. So that person shouldn't be as cheated. I mean, their score is probably going to be pretty good if they're making all of their installment loans. But if they had some revolving credit, it wouldn't hurt, right? It could only boost the score. So that would be, have a credit card that you use and, you buy your groceries every week, but at the end of the month, you pay it all off, right? So you don't have a debt. And you basically are able to manage your things that you're paying for in cash just in a different way to boost your credit score. Because that person who asked that question, I'm sure that their credit score, if they've had installment notes and they've been making payments on time and it's seen there, it should be a good credit score. Having a credit card or that revolving credit and then paying it off every month is just going to make it stronger.
Well, yeah, because I mean, if they're doing a home and a car, those should count, right? Or
Yeah, they do.
Do the daily expenses, are those weighted more, like the buying your groceries on a credit card, or things
No, what I talked about earlier is that the mix of your credit is part of the score. So just having a mix of it, right? So having some revolving and installment, will help your score. So just having installment, but if you've got some revolving, it'll help it. It'll help it.
Okay, yeah, I think that's helpful. And so yeah, it sounds like what you're saying is you don't have to be paying interest on a credit card in order to improve your credit. It's more so the practice, which it sounds like this person's doing, of putting things on a credit card and then paying it off in time and being like, hey, look at me. Look, I can't afford it. Just like you already can, right? So you're still in theory paying cash for it. It's just you're paying off the credit card each month.
Yeah.
Okay. Very, very helpful. Some questions about how long bankruptcy stays on your report. Is it like a step down scale where as you get further from the bankruptcy, the score goes up, or is it like, voila, 1 year, it's just gone?
Okay, so I'm not a credit expert as far as this. So depending on the type of bankruptcy, one is on your record for 7, or it'll show, right? It's going to be part of the record for 7 years. One is going to be part of the record for 10 years. They'll look at different things of when it's discharged, right? Because when it's discharged, it means it's been liquidated or just different. So there's several different factors in that. The main thing is really if you have one, if you've had to file one, which I hope you haven't, but if you have, and it's probably the right thing to do for your family and for your financial situation, is then just know the time periods involved around it, and then just monitor it to make sure that when that time period has ended, it's no longer, it's off your record. It's kind of removed. So it's a time thing. The same way that it takes time to build your credit, there's going to be time for that just to kind of go through the time and time since it's happened and everything. So definitely right when you file, and it depends on the lender, they're going to have different guidelines around it. Like we won't do any loans for someone if they file bankruptcy until it's been 2 years since it's been discharged, a year, 3 years, everyone's going to be different. So there is no right answer, just ask. I think that's the main thing, is that you don't try to hide that, and that you're upfront and that you ask and have the right information about it.
And how would that work with Lift Fund? Does it depend on the loan? I mean, if somebody had a recent bankruptcy, are they kind of like they need to step out of the loan game for a while, or can they come right back into getting money from Lift Fund?
So with Lift Fund, there is going to be a limitation. So if there's going to be have to be a certain period of time since it's been discharged as well. Yeah.
And we talking certain amount of time, like a month or like 5 years or 10 years?
It's not going to be 5 or 10 years, but it's going to be, depending on the level, at least 2 years.
Okay.
Yeah, at least 2 years.
And any advice on what to do during those 2 years? To sort of, it's almost like, like let's say you go through a divorce and you say, you know what? I'm going to take myself out of the dating scene for a little while, and I'm going to, maybe I'm going to go to therapy, and I'm going to get working on my nutrition, and I'm going to get reinvested in my work. Is there any sort of like credit version of that? If you're like, man, I was hit hard by something, may not be their fault, but they were hit hard by a bankruptcy, and now they're figuring, okay, well, I can't, start my dream business right now. I can't get the money for my next big dream business or thing that I want to start. What should they do in the interim?
So a couple of things. Okay, just seek counseling. So the fact that there is free counseling resources and services that are out there through nonprofits in all the different communities, right? So seek the counseling to help, and really start putting in place some of the personal skills that you need of saving and not buying something until you have the money to pay for it. Right. So the fact of learning the skills of saving and some of the behaviors that you need to replace for this not to happen again. Right. Because filing a bankruptcy, in a way, for some, it's a lifeline, it's a reset button, it's a pause, but you definitely want to strengthen the skills that you need in your savings ability and your discipline to save and your discipline to wait for the right time, and that in place. Because there's a great story on the other side of the bankruptcy and what you had to do, but we can't we can't speed up that time. It's going to take time. But I would definitely say seek the counseling that's out there, that's available in your community for free, because there's lots of nonprofits that are offering counseling to help you, because that is a huge trap that can happen to someone, to have all kinds of access to credit, and personally get wrapped up in that and then want to start a business, right? Because of the fact that the personal. So there might be some time that needs to go by where they learn, they grow, they learn some different personal skills, because that's going to help them be even stronger in their entrepreneurial journey, right? So that it doesn't happen when they're in business.
Yeah, I think that's really good. Gosh, so many things in life. That just applies to so many things in life where you want something and you have to wait and you have to figure out, what do I do in the interim? How do I make myself at peace? How do I enjoy my life and, enjoy what's around me during that period of waiting? So it's very, very helpful. Okay. Does Lyft Fund have a component that assists business owners become credit worthy, or to sort of step up their game when it comes to their credit? Is that something that you guys do, or do you have any other resources to recommend for that?
So we would help, so our business advisors are able to help in assessing and working with the client to get them loan ready, right? So credit might be a component of it, in some tips, and really looking at their credit report and helping them understand what are some of the accounts that you could buy down, pay off, those types of things. Or they're going to refer you to an actual counselor or a resource locally that you can work with. So we kind of work with you as much as you can, or provide you with the resources to get you the help that you need. But we do have business advisors that can help you get ready, right? And make sure that you are ready too, right? Like I said, that we're not able to do all the loans right when a person needs them. There might be that, step back, help you through the process to get you ready. Yeah. And that might take a month, it might take 6 months, depending on the situation, but we're here. We have the resources to help get you ready.
It sounds like you want to start sooner rather than later, and then you guys will let somebody know, hey, you need to do more work on your own, then come back to us, that sort of thing.
Yeah. So what I really would advise is that you look at Lift Fund and start with the "Am I ready?" part, right? I had that in, that you can go to that and check and see, or go right to our business support and talk to a business advisor before you apply, before we do a hard pull on your credit, before you go through the process, is really seeing, am I ready, in your program, and seek that help before you apply, because we have it available for you to do that.
That's great. Oh, and thank you to whoever is on the Sarah account. I think that's you, Bob, posting the liftfund.com
Yes.
slash am I ready? And so again, if you weren't there last week, or even if you were there last week and thinking, okay, I'm kind of putting the pieces together of these 2 sessions, that is that replay is up on YouTube, and then you can go to the I am or am I ready? I am ready. Am I ready? Kind of figure it out from there. This is another good question, Maria. If you co-sign for someone and they do not pay the payments, will the creditor go after the primary borrower first or the co-signer? Is that do you know how that would work?
So, I'm going to answer this based on how this happens. When you co-sign a note, you're responsible for it. So when there's like two of you are responsible for it. So it's not like there's a first one and a second one. You would think that, right? Because yes, you just co-sign for them, you're the backup, but at the end of the day, that shows up on your credit. And so if the first person is not paying it, it's going to show as a delinquent account on your credit as well. It'll be on their credit and your credit. So when you co-sign for someone, you're basically letting them borrow your credit. And how they pay and how they manage that is going to reflect on your credit.
Everyone's like, uh-oh.
Right.
So
as we look at different, when I think of as a parent, right, and you're trying to teach your child about credit, and gosh, with the kind of super amazing kids that we have these days, you might be opening up a credit card for your kid's business, right? Because your kid's 13 and he wants to start a business, or she wants to start a business. The same steps of getting a small, and they're called secured credit cards, where you have $500 of savings. It's in the bank, but the card is secured by that, right? So that's a way that you can start an account, and that account is, just in the kid's name. But it's a way. So there's some different things that you can do to get a small amount to help, someone that one of your kids you're trying to teach, or a younger person, to get credit and start working that, but just to learn what that's like, and the repayment. But yes, the co-signing, because I have seen people that have co-signed for their son's or daughter's car payment, and then something happens when the son or daughter loses their job or is unemployed for a period of time, that they step up and need to, or just know that it's going to be on your credit as well. There's no way to avoid that.
Oh, so yeah, somebody's got to pay for it, right? So, what about for people that are newer to the United States? Maybe they're here through DACA, or so a different residential type situation. Maybe they're not officially a resident here, or a citizen here. What are the differentiating points, if what sort of paperwork do people have to have? What status do they have to have in order to work with Lift Fund specifically?
So with Lift Fund, we are able to do some small loans for people that have an ITIN number. Right, so that's different. It's not a social security number. So someone who's new to the States, if they have an ITIN number, we're able to do smaller loans under $10,000 to help them in that startup of the business. We do, that's kind of the starting point, and that would kind of also incorporate if they have, let's say. And of course, I'm not an immigration attorney, right? So don't get, the different versions of the visas, right? If they're a foreign investor and they're establishing, and because some of those have a social security number that's assigned to them, but it's different than a social security number. So more than likely, or I would say more than not, our preference is that you've got a social security, you're at least a legal resident in the country. if not a citizen. So at least residency, legal residency is going to give you the most availability of funds. But we do small loans for people that are, new with ITINs as a way. Mm-hmm.
Gotcha. Because the process can take so long for some people
Mm-hmm.
that sometimes waiting for that full, process to take place, it can
Yeah.
really, kind of put the dreams on hold for a really long time. So
Yeah. Well, and know too that there's other sources and other ways that people can raise money,
of course.
right? So that there are other resources available to them, but through the regular instant lending thing, there's some of those rules are just part of the way the financial world works. Yeah.
Yes, that makes sense. Let's wrap up with talking about how to get your ducks in a row, so to speak, where you're thinking, okay, I think I'm gonna, be bold and reach out to Lift Fund or another group to, get some finances to expand my current business or to start a business. What do they need to have before they reach out to you? I know that this is probably an hour-long conversation in and of itself. We talked a little bit about it last week, but maybe if you can just give a few things that they want to have already, set in place before they call you.
So for sure that depending on who you're using, right? So if it's with Lift Fund, we're gonna be pulling a TransUnion credit report. You should pull your TransUnion credit report, check it over, make sure everything on there is correct, that there's no errors. And if there's errors, that you fix them before you apply, because it's going to help your score, right? So you should know your credit already before you come to Lift Fund to ask, right? And see and be advised of that. Reach out to our business support and schedule an advisor, to walk you through the are you ready to look at things. If you go to the I am ready part of our website, right? And let's say, and it's only 11 questions, but if in the 11 questions says, what are your business assets? What's your collateral? And you're not quite sure what you put there, then definitely sign up to meet with one of our business advisors or reach out to get, one-on-one help and through that process of just understanding that and everything to better prepare you. So I think it's just the preparation part of it is going to be what I would recommend the most. But definitely that's what, we talked about today, how important credit is, all the different factors of it, but pulling it and making sure that everything on there is correct, right? We can't change what is, right? What is stuff that is your credit. But if there's something that's wrong, definitely want to fix that.
Yeah.
I want it to be accurate. I want it to be accurate.
You may have said this. I'm not seeing it in my notes, though. How often should we pull our credit?
So right now you can do it. Normally it used to be, and it will get back to that normal of you can pull a free credit report for every of the 3 once a year. So that's why it was the thing of every 4 months, pull one of the different ones to kind of get you through that year and make that part of that process. Because right now, I think on the website, it says every week you could check it for any of them because of with what's happened with the pandemic and just being up to date and making sure that stuff isn't hitting on your credit report for things, right? Things have been different the last few years with COVID and how things are, where people have maybe you've got a loan or something that's been in forbearance or that they've, and so you want to make sure that it's being reflected on your credit report accurately, right?
Yes, of
Because
course.
it's one thing to have an agreement that I'm not going to pay it for a while, but are they reporting it on my credit that I'm not paying it for a while? Or are they reporting that I'm not paying it, right? There's a different way that shows up on the credit report.
Oh,
The same with your student loans as well, too. Yeah.
that's yeah, right. And that's
Yep.
a whole nother topic. Well, Maria, thank you so much for your time today. I sincerely appreciate you and, and putting the presentation together and all you brought to the table. It was really, really helpful.
Yeah, and I'm glad we had time for like the deep dive and looking at breaking all that information down on the credit report. Yeah, because credit stuff can be kind of boring.
Well, it's good to have it in a conversation mode, right? Like,
yeah,
that was great. So you guys, I hope that this was helpful. I always hope that these events are uplifting to you. I hope that they bring hope. I hope they bring new ideas. I hope they educate you. So Maria generously shared her email and that I am ready link, which is in the which is in the chat there. So if you wanted to copy that off, you can. Also, scroll up in the notes in the chat, and I believe that Sarah National's YouTube channel is up there in the chat as well. And if not, oh, there it is right there. So it's right there at the very bottom. You can subscribe and then get the replay from last week and even watch the replay for this week, which will be up by next Wednesday. And I can't wait to see you all next Thursday. Thanks, Maria. Bye, everybody.
Thank you.